Welcome to my weekly review. You're looking at a weekly chart of the Nasdaq. Just wanted to point out a couple things here on the weekly chart. This is a weekly review. We just had a correction here of 9%, and you could see it was down 1, 2, 3, 4, 5, 6 out of 7 weeks. And this week, the prior week, was what I would consider a capitulation selling week, where the sellers just became exhausted. And then last week we were up 4.23%, 646 points on, lighter than average weekly volume. But we had an inside week and we recovered roughly half of the correction in 1 week. So that's really a good sign on the weekly. I just wanted to point that out before going to the daily chart. Thank you for tuning into my weekly review, by the way. Today's Saturday, April 27th. And I'm just going to go through a little bit of what, the Nasdaq has done here from October 26 up to March 21. It had a 31% gain, and now it gave back 9% correction, which a garden variety correction. You got to expect this from time to time. I thought we were going to have a 2017 type of year, 2003, 2004, where it just never had more than a 5% correction and was supported by the 21 all year. But now it decides to undercut the 50. And what was significant from last week, so this is the Friday, which I believe was capitulation selling. The sellers just get exhausted, just like buyers get exhausted on a climax top. So this is, I believe, the end of the correction. But I'm often wrong, but never in doubt. How about that? So we come in Monday, have a little inside day, and then rally up Tuesday and Wednesday. We got some bad data. Thursday morning, big sell-off, but it closed near the high of the session. So buyers came in on this Thursday and Friday following the new data points from Microsoft and Google. The Nasdaq really rallied. So we saw a rotation back into technology stocks. I'm going to get to that in a minute, but you could see it shows up in the Nasdaq. And what I think is really important, on Friday, it closed, recaptured these moving averages here. There's your, the green line here is the 10, which crossed over the 21, and now it's starting to curl back up. And then it closed above the 21, 0.8% above the, below the 50, but 1% above the 10 and 0.2% above the 21. So there's your 50 right there, which, we'd all like to see it, drive right through that level. But anyway, at least the longs would. I don't think the shorts would. S&P pretty similar, because, Google and Microsoft are in the S&P. So big drivers of this index. It recaptured its 21 barely, 0.1% and 0.6% above the 10. And it's 0.5% below its 50. So it could drive through that pretty easily next week. It was up... I got to go to the weekly chart. Here's a weekly review. It was up 2.67% last week. And so there you see, pretty similar to the Nasdaq. We had this massive gain. We make a lot of money, and then we step on the brakes until we get a confirmation sign. Now, a lot of people want to say, oh, we had a follow-through day on Friday. It's time to plow in, but the volume wasn't there. So to me, it was just a rotation into technology stocks. And I'm going to go to the Dow, because the Dow is kind of lagging now. The Dow was leading, and now it's kind of lagging here. It's below its, it recaptured the 10, but it's below the 21, which is different from the S&P and the Nasdaq, which recaptured its 21. And then okay, I'll go to the IWM just for kicks. And this is below its 21 and 2% below the 50. So that has work to do as well. So we're not out of the woods yet. Nasdaq was a stronger index because of earnings. I say it over and over and over again. The greatest driver of your stock appreciation is earnings. You have to have the earnings. And that's why I'm a stickler for earnings. In that earnings line, you want to see that thing going due north. But Tesla reported earnings, and it looks to me like it just bottomed here. Like it's just like the Nasdaq. Sellers just got exhausted. They reported a pretty lackluster quarter. You can see here these large red numbers, and the earnings line going due south. But I think it's just, like I say, capitulation selling. Looks like a bottom, 44% off of the highs, 52-week highs. So Tesla's still in a downtrend, still looking bad, but probably got some short covering there with that earnings report. Another earnings report that I thought was fantastic, but it sold off because Meta Platforms is spending too much money. They were diddling around with the metaverse while Microsoft and Google were getting serious about AI, and now they're spending a ton of money on AI, and I'm going to get to that in a minute, who the beneficiaries are of Meta Platform spending, who their partners are, and where we can expect to see some growth in some other companies, because they're spending a ton of money to try to catch up here. Anyway, it sold off after the earnings report, nearly 11%. And then on Friday, you know, a nothing burger. But the big story here with Meta is, you know, they had fantastic earnings, they have tremendous growth margins. You could see the sales and earnings growth. That's not the problem. The problem is they're spending too much money, and Wall Street didn't like that. So I believe this is for a long-term investor, this is a gift here if you wanted to own Meta Platforms. But the big story is they're spending. Same with Microsoft with their earnings report, which was fantastic. I think their Azure sales were up 31%, which should bode well for Amazon this week. But their earnings were fantastic. They're spending a lot of money still, even though they're doing really well. And you could see that it sold off prior to the earnings report, and then on Friday, following the earnings report, it closed near the lows of its daily range there, 8%, which is not something you want to see on this gap up higher. It looks like it just got rejected at the 50 there. So this thing still has work to do, close below the 10 and the 21 and the 50. So Microsoft, it looks like, you know, I don't want to say dead money for now, but it's just consolidating in a base. So it had a big move and it's consolidating still. And I'll probably have to report a couple more quarters like that to really start ramping again. We'll have to wait and see. Google, they're not spending as much, but they're spending. This thing consolidated in a base while the Nasdaq was correcting that 9% correction. Google just, you know, blew it out really. Fantastic report. Gapped higher, closed at 45% of its daily range. So there was some profit takers on a Friday afternoon, but still, you know, more than a 10% gain with 100% above average daily volume. That is a move not to be ignored, Dan. Anyway, I talked about Amazon, who's reporting this week. We're just gonna have to wait and see. I believe, you know, you hear Andy Jassy and Lisa Su and all these Jensen talk about, you know, a $2 trillion addressable market here with AI. And, you know, you have to take their word for it. I don't know. But if there's 2 trillion, we're just at the beginning stages of this ball game here. And there's going to be a lot of winners and there's going to be a lot of losers. So you have to identify these. And these earnings reports are a good place to start in identifying the winners and the losers. I'm looking forward to Amazon is reporting on Tuesday. And then Apple's going to report as well. Might as well show Apple since I'm showing all these. Clearly in a downtrend. You know, they're kind of relying on their legacy businesses. You know, they're fooling around with an electric car, and they're going to have to get serious about AI too. So, you know, they have a China problem as well. So I don't know. If you're a bottom fisher, you might want to be buying Apple. I don't know. I would wait and see what they have to say on Thursday. Anyway, I talked about the beneficiaries of all this spending, and it's got to be NVIDIA. To me, this is the king. This thing is a buy for me. I bought it on Friday, broken above that little trending line here. On Friday, rallied through. So I sold it as it sliced its 50, and I bought it back again as it rallied through. Okay. Because when it slices to 50, I don't know how low it's going to go or how long it's going to last. Once it makes the bottom and starts to recover and starts rallying back through, then I buy more as a kind of a punishment. But to me, I sell and then buy back as insurance. I pay more. Yeah, it's like insurance against big losses. And I'm not going to take big losses. Here, I bought at 500 and just sold as a slice at 50 per rule. Maybe I should change my rules, but that's my rule. So I just sold at the 50 and bought it back. No big deal. I bought more. Anyway, they're the beneficiaries of all this spending that you're hearing from these companies. they don't report earnings till May 22nd. So, and their comps are going to start getting a little tougher, but NVIDIA is the king of AI. And so if you believe that this new bull market is being fueled by artificial intelligence like I do, then, you want to own the best. That's why I like to own NVIDIA. I've got a alert to AMD. AMD is reporting Tuesday after the bell, and, they have to start delivering the goods here because the PC market has allegedly bottomed, and we're starting to see an uptick, just like in the storage space. We're hearing a lot from these groups that bottom is in, and now advanced micro devices in AI, but they're also in PCs. So I want to see this earnings line start ticking up. They have to start delivering the goods. You see, this was down like the Nasdaq, like 6 out of 7 weeks, something like that, and then rebounded last week. So I believe the low is in, obviously, unless they spit the bid on Tuesday. A low is probably in, and it's probably going to trade higher with just you can see the sales growth here, 4%, 10%. If they do anything 15, 20%, that this thing's probably going to trade higher. So anyway, another one that I like in this space is Broadcom, double bottom base here. I would get in early. I like getting in early. I wouldn't wait to that 1400 mark, but if you want Broadcom, I think you get in now. June 6th is the earnings date. You can see the consolidation pattern here on this weekly chart as well. So Broadcom looks good to me. Anyway, I'm going to move on to some of the other stocks that reported earnings this week. And if AI is the theme, this data center plays are going to be another, like a derivative play off the AI. Also with the, electric power companies, all the CEOs are talking about how much power we're going to need for this the artificial intelligence revolution. And Vertiv reported earnings, and they were just phenomenal. Not the earnings, the past earnings, but what they said about going forward, their backlog. Through 2025, they're seeing tremendous growth and 79% earnings growth. Thank you very much. We'll take that. Yeah, I mean, your greatest criteria for stock appreciation is earnings growth, and Vertiv has it. Fantastic move. Now this thing traded down to its 50 for the first time since breaking out, kind of like NVIDIA. Ramped for a long time, pulled back to the 50, and then found support and bounced. And that's one of my go-tos. I did mention that with NVIDIA. This one undercut the 50, then rallied through. Vertiv just traded down to the 50, didn't trade below it or close below it, and then found support and bounced. So Vertiv is a very strong stock. And I think that was a gift there, the pullback to the 50. Anyway, another one that's reporting this week is Supermicro, and they're they didn't pre-announce raise guidance, but they're going to report on Tuesday, and I can't believe that if we're just at the early innings of this AI ball game, that these guys are out of business already. I got to believe they're taking market share with all of their new products. I don't know, their earnings report is going to be heavily scrutinized, but I don't know if they're going to look at, shrinking margins or debt, or I don't know. They're going to try to knock this thing, but I believe they're going to have a beat and raise quarter. I don't know how the stock's going to react. I know a lot of technicians believe after this major run up, this late stage base, that this is a climax top. And on the daily chart, this head and shoulders pattern is the end for Supermicro. There's your shoulder and your head and your little Gumby shoulder going down. Vertical violation of the 50. It's got a lot of red flags here, but got to give them the benefit of the doubt. They could come in on Tuesday and just blow it out, and investors will be back. And how sentiment is, it changes. It's very fickle, and I would not be surprised if they just blow it out and this thing rallies back up. I'm just saying. Another one in this hardware space that are benefiting from the AI revolution is DELL Technologies. You can see this thing's still consolidating in a base, support at the 21. They don't have earnings till May 30th. but you could see it gapped higher, and now it's just, kind of trading sideways. Very interested. I'm going to get to these later, these gaps higher and what they're doing here in the market, because in a bad market, in a downtrending market, they gap higher and they come right back to their pivot area. And if they gap and go, then it's a real strong market. And if they gap and just go sideways, we just had a 9% correction. You can't expect these things to be taken off and making new highs. Anyway, another area of the AI revolution is the power. I talk about we're going to need like 200 times more power to drive this revolution. That's really using a lot of power. So the more efficient companies will probably benefit. But this is Quanta Services, and they're power company. This is a tremendous stock. You can see that these earnings line heading due north, and the stock is going right along with it. It's a steady eddy. It's not a real volatile stock, but it pulled back to its 50 for the first time, kind of like the Nasdaq, how it just pulled back here. And this is probably another opportunity to, if you didn't get in on the breakout and the run up, then a pull back to a 50 is, probably an add-on buy point for you to get into Quanta Services. Another one that I like in this space is Sterling. They're in the data center, power, and then you can see the earnings line right here, just gradually due north. And this is like Quanta, not a real volatile stock. It's only a 3.2 billion market cap. But once again, gapped higher and pulled back to the 50. Now this one undercut the 50, so, and then rallied back through on Friday. So kind of like NVIDIA a little bit. But with the Nasdaq correcting 9%, you're going to see a lot of chart patterns like that. Eaton, they report this week, I believe. Yeah, Tuesday. This one rallied up hard, pulled back to the 50, and I would be a little hesitant about buying there ahead of earnings. But this is another one that's a data center play. This is really diversified. These guys do everything. They even make golf grips. How about that? For my clubs. Anyway, you can see the earnings line. This is another steady eddy. These are not, like NVIDIA and Supermicro, they're really volatile, just kind of a steady eddy. And I like this stock a lot. Like I said, they report on April 30th. Anyway, I'm going to move on to the storage group. This is another strong group, one of the top groups in the market, along with the the hardware data center, Dell, Supermicro. This is Micron Technology. Just want to point out with this one, the earnings, like I talked about the rebound here, you can see it in their earnings line heading due north. This one just pulled back like the Nasdaq. You got to embrace pullbacks. You can't don't be fearful of it. That it did not quite pull back to the 50 and then recaptured its moving averages on Friday. So Micron looks pretty darn good to me. Seagate, another one in this group that undercut the 50 and let me see, traded below it. So yeah, we don't like stocks below the 50, but that's why I had this on. Yeah, the rebound here, the earnings line heading due north. So they reported earnings. And so this is a rebound, and this type of a cyclical market, it's not weeks or months, or quarters, it's years, So I believe that we're at the beginning of a new cycle in the storage as well. Pure Storage, Charlie Giancarlo's company, gapped higher and just traded sideways. That's not bad. You can see the double bottom here, pull back to the 50, found support. This one looks pretty good. They don't report until May 21st, so that one might show up on our watch list or ready list. Anyway, I got to move on because I got to talk about food. The food stocks are just killing it. CAVA, once again, this is an IPO base, breaks out, runs up to 71.60, then pulls back to its 50, like the Nasdaq, the pullback, the 9% correction are going to drag stocks down. You might find a few stocks that buck the trend, but having the tailwinds from the index really helps in trading. And we saw that at MC Stock Charts because we had 2 bad weeks of trading, and then last week we kind of picked it up again. So it really helps when the Nasdaq's up 4%. But anyway, CAVA had a nice 10% move on Friday, bouncing off of its 50, up 15, 16% for the week. That's not a bad week. And you look at the weekly, that's, looks like a pretty much textbook classic IPO base and breakout. And you can see it again on the daily. They report May 29th. Another food stock that I like, shouldn't say food, these are restaurants. Retail restaurants is Wingstop, and this is just consolidating in a base. Once again, the breakout, the move higher, pull back to the 50, finding support. They report on the 1st, which would be Wednesday. Yeah, Wednesday. Okay, so we'll be watching Wingstop's report on Wednesday. You can see this earnings line heading due north as well. And the last restaurant stock I have to talk about is Chipotle. You can see the earnings line heading up. They're going to have a massive stock split here, but this thing is just a juggernaut. Traded sideways while the index, yeah, you can see that sideways action while the index was correcting. CMG was just going sideways to its 21. Then it reported earnings and blasted higher. So congrats to the longs there. I did mention food and Sprouts Farmers Market. I just like the setup on this base here. You can see the breakout on this day, 11% move with volume. Then it got, it has a David Ryan answer, and then it traded sideways, and now it's starting to push away from this base here. They have earnings May 1, so I'm going to take that one off our ready list. Had it last week, and it traded pretty well last week. I'll go to the weekly once again. Yeah, it was up nearly 3%. Not bad for Sprouts. Anyway, VITL, our friend Lauren alerted me to this. This is her pick for the year. It's done great this year. This is, I tease her, it's a $10 egg stock. But definitely, this is a Kelly Slater stock. I mean, breaking out, and it's not pulling back to its 21 or its 50. It's just surfing the 10 here. So, every time it pulls back to the 10, it's a buy. Now, things could change, but for now, that's what it's doing. You look at it on the weekly, and you can see this breakout from this big base, breaking out. Man, it's up every week except for this one, huh? So no such thing as a pullback with VITL Farms. How about that? And then Mama. This is Mama. Some people ask me about Mama, so that's why I'm covering it. Double bottom base on a breakout, right? This is Mama Mancini. Yeah, I think you see it in the stores there. Yeah, I mean, I'll take a look at a thinly traded stock, less than 300,000 daily volume with $6 price target. Anyway, Mama looks good. I mean, if you're just looking at it technically, I'd like to see this earnings line start heading due north, but you could see the breakout. Last week it was up 17.5%, so that's a good week. We'll take that. Anyway, they don't report till June 12th, so just got to put Mama on your mind, Mama's Creations. I'm going to move on to the software name. Spotify reported earnings. Spotify is one that, a lot of people have Spotify. I think it's one of those services like Netflix that you're just not going to get rid of. If you're cost cutting, you're going to keep your Spotify. Anyway, broke out of the base, ran up to 313.16, pulled back to the 50, found support, and then ran up higher following its earnings report last week. And you could see the earnings lines really starting to crank higher now. So yeah, nice 5% gain for Spotify last week. And it has a running mate, Duolingo. I always look for, partners whenever a company reports, look within the group to see, if there's any pen action. And this is Duolingo, and their earnings are heading due north. That looks fantastic. It was up more than 11% last week. You could see it consolidated this cup with handle, then, fell out with the Nasdaq, right? The Nasdaq corrected 9%. This thing traded from, 245 down to what, 204, 194. Okay. And now it's recaptured its 50. So that one looks fine. They're going to report earnings on May 8th or around that date. And Datadog is one that I like. Datadog, it went up on Friday after the Microsoft. It's a partner of Microsoft, and it's a partner of Amazon who reports Tuesday. So this thing could explode higher. This one's definitely going to be on my ready list. I really like Datadog. I should have had it on last week, but it was below the 50. And, stocks below the 50, I'm a little hesitant to to recommend, but that thing looks fantastic as well. I got to go to the weekly. This is a weekly review, and you can see the earnings line heading due north, and the stocks usually follow the earnings line. So ESTC is another. This is the last software name, I promise. Its earnings line's heading due north. Stock might have got ahead of itself here. It broke out of a base and really ran hard and now pulled back. You can see maybe some capitulation selling in here. It's got a rounded bottom here on the daily. You can see the clean break there of the 50, and then it rounded bottom, not a V-shaped recovery. So the sellers are gradually getting out of here, and now the buyers are gradually buying back in. Recaptured the 50 on Friday barely. I really like this stock. May 31 is their earnings report, but definitely an AI play. Anyway, I got to move on to the drug stocks because they're reporting earnings this week. Novo Nordisk sold off 6 weeks in a row, which hadn't done in years. But you could see this earnings line heading due north, and this is the weight loss king. Yeah, I believe they're going to just blow it out. They're selling everything they can make. I'm not saying that the stock's going to make a new high. It's 8% off of its 52-week high, but I do believe the earnings will be very strong. Consolidating in a base, just dancing with this 50 simple moving average here. It's a very gappy stock, as you can see the gaps here because it's an ADR trades overseas. But yeah, I like Novo and I like Lilly. These are the two drug stocks that I like. Lilly ran hard. When the Nasdaq rallied this October, November, December, this thing just went sideways. It ramped at the start of the year, now has gone sideways, went cold since February. So this is like a couple months of consolidation. They're going to report on the 30th. So Lilly and Novo back to back, the 1-2 punch. I think it's going to be a knockout. Looks good to me. A couple of speculative names that I was watching, had on my ready list this week was Dawn. They have an FDA approval and then sold off. Which is really frustrating. You got to watch and see shorts in the stock or whatever. But this thing got approval. I guess was flat on the week. It recovered Friday. Yeah, 13% is a nice recovery, but kind of disappointing when you get FDA approval for a cancer drug and then sell off. But that's what these speculative biotech names do. I'm not one of these 5-year plan guys. I think that's a good way to lose. 5-year plans don't work because of competition, because of lawsuits, because patients, there's just a lot of complications. And I don't buy a biotech stock with a 5-year plan. These things have to move, or it's adios, muchachos. This is Aquestive. They had a FDA approval after the bell on Friday, which is like the worst time. That's like bad news dump hour. But this thing broke out of a base, ran up to 623 and pulled back to its 50, and he's just dancing with the 50 here, kind of squatting, which I don't like. It's got to move off the 50 or it's adios muchachos for me. But you can see heavy volume interest here in this stock recently. Big difference from what it was doing before. You can see this on the weekly chart. This last, I don't know, 10, 12 weeks, this thing has been getting a lot more interest. And you can see the run up and then the pullback. And they have 50 million in sales with a 350 million market cap. So it's like 7 times sales. And with this approval on Friday, it's going to ramp sales. But they did a secondary offering. They did 2 secondary offerings, so they should have cash to launch their drug and their film. So we're just gonna have to wait and see. But like I say, with biotech stocks, if they don't move, it's adios muchachos, because if they don't go one way, they're likely to go the other. And there's just competition. There's just a lot of complications with these things. They're by no means a slam dunk on any of these. By the way, I got to mention Viking because they reported quote unquote earnings, but you can see the gap higher, the pullback to the 50. This is, I really like this stock. They got this downtrending line, which it broke out of last week, which coincided with its first trip to the 50. Found support, bounced on Friday, nearly 8%. I believe for the week it was up 17%. I like this thing a lot. This is highly speculative. They don't have any sales. They just have drugs, weight loss drug, which is a good drug to have. But you can see this is kind of flagging here. So I like Viking. It's high risk, high reward, outhouse or penthouse type stock. Anyway, Last group is Weatherford, and the oil stocks, just got to point it out, broke out of a base, pulled back to the 50, found support, had strong earnings. Yeah, I like Weatherford a lot. If I'm going to buy an oil and gas stock, yeah, I was up 13.5% last week. Thank you very much. And you can see the earnings line just gradually, heading due north. Another one that I like in this space is AROC. And you can see the earnings line heading up, just like the stock's heading up. This is a really slow mover. It was up nearly 4% last week. Broke out of a base, pulled back to the 50, found support. I know I sound like a broken record, but that's just a lot of chart patterns are looking like that. Hopefully they find support at their 50. Some of them don't. A lot of them don't. Tidewater, this one didn't even pull back to the 50, found support, moved higher. They report earnings. That's why I posted this one. This is at oil and gas field services stock. May 2, which is Thursday, they're going to report earnings, and you could see, just a steady eddy, gradual earnings line higher. And that's it for me. Thank you for watching my weekly review. Except for I lied. I have one more thing. I just wanted to point out some stocks that are gapping higher. You can kind of tell the health of the market by what happens with these earnings gaps higher. Like, what are they doing? Are they gapping and crapping? Are they gapping and going sideways? Are they going to gap and go? And it kind of tells me a lot about what's going on with the market. This is semiconductors, a fabulous stock. This is in with AMD, Broadcom, and NVDA. Now, I'd rather own NVIDIA than this thing. I'm just acknowledging and observing a breakout from a base here. And it pulled back on Friday, but, this is a massive breakout on, lackluster earnings, 28% move with heavy volume. So I'm going to monitor this one. It hasn't had enough time yet. Another one, just some recent ones. This one gapped on Friday, closed near the low, 9% of its daily range, but 11% move with heavy volume. I'm going to be watching Skechers as well. And with these, like I say, you gotta look at some of these other stocks in the group. Boot Barn, shoe stock looking pretty darn good, and then AEO is in that retail apparel group. Yeah, not bad, consolidating in a base. And so that's what I look for when I see these breakouts, these moves higher. Badger Meter, machinery, industrial stock broke out of a base here on April 18th, a 17% move with heavy volume. This one's gapping and it's going to go. So, you got to acknowledge this. And so I would look around at some of its partners in the group, DXPE. This one gapped earlier. This one was ahead of Badger Meter, and during the correction, it just pulled back to its 21, and now just squatting, and it's has earnings on May 7th. And another one is Parker Hannifin in this group, which, yeah, hello. I mean, really ripping higher. First trip to the 50 since the breakout from this base here. So looks good. This is why I watch these gap and goes. This is one that I had on my ready list last week. The mining stock, gold mining stock, reported earnings and gapped higher. 12.5% on Friday. Thank you very much. That one was up nearly 10% for the week. So 10% is nice, especially if you're playing options. Another one that broke out, I believe just Friday, was it? Yeah, Friday. Now this one closed near its 98% of its daily range, which I like. This is ResMed, medical product stock. I didn't even go through the information on this one or its peers because I don't have time. I'm trying to do a video. This is the Amazon of Korea, Coupang, retail internet, and it broke out on April 12th and is just ramped. This is a gap and go moving higher. And when the Nasdaq was correcting, this thing was ripping higher. So that's something to take note of. And you can see these big blue bars. So the institutions are buying Coupang. I have to name drop Stanley Druckenmiller, likes this stock like big deal. Anyway, this thing, you can see the earnings line, which, is a driver of stocks. Got to watch the earnings here. And a couple more. Maybe just one more. PUBM, this one broke out of a base. On February 27th, it moved higher and then kind of corrected with the market, but didn't pull back to its 50. And this is a commercial services advertising stock, and you could see that kind of rebounded in the earnings here. So things are looking pretty good in the market, I think. We have a lot of earnings this week, and earnings is a volatile time, and it tells us that, the winners from the losers. So we have to pay attention, look for those stocks that are breaking out, and look for some pin action from the group. And anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never, ever give up.